Welcome back to the weekly update for the 28th of May. Trust you've all had a good week, so we'll get into looking at the week that has been and where we go from here. So first of all, the important information regarding the fact that this is general advice only, and you certainly need to take account of your own financial circumstances before you trade. Now the action for the week just gone, the S&P index was steady for the week, and it was up and down and all over the place, but ended up around about the same point. And on a weekly view, it's still consolidating with really no indication of an end to the overall upward trend. The US dollar really fell over very hard on Friday night, and importantly broke the recent lows, so we may well have seen a high in the US dollar now. Gold was up 1.6% for the week as a consequence, and certainly appears now to be heading for 1570, and that will particularly be the case if the US dollar index does continue its downward trend. Silver was higher, so looks to have bottomed. Not 100% sure, but I think silver has probably bottomed, and again the decline of the US dollar will certainly assist that. And there really is huge upside potential in silver. I mean, I can see silver doubling or tripling from this current level, where I doubt very much that gold's going to do that, but we could see another 20-30% in gold. But silver is certainly the one where the big upside is. And our index was down 1% on the week, still struggling, and the fundamentals really are against our index moving much higher, so we've just got to be very specific about the stocks that we select. So let's have a look at some charts. So first of all, this is the US dollar index, so I won't bother with the big picture. You've seen that before. We're looking at this index heading probably back down towards the 71 mark, and you can see we're just under 75 at the moment, but having broken below this low of last Friday, I think it now highly likely, in the way that it did it on Friday night, I think it's highly likely now we're going to resume this downtrend. So that will be good for commodity stocks and probably good for the stock market in general. Let's have a look at the S&P. So first of all, this is the S&P index on a monthly chart. So you can see we had May and June of last year were really the only significant negative months in the last 2 years, 2 and a bit years, and we really don't even have a May that equates to the May that we had last year. So you can see we've only traversed around about half the range of May last year. So that's why I just can't see any sign at all. I know there's a lot of negative talk at the moment, and I think it certainly is appropriate for us to be cautious in some sections, and particularly the small caps, which aren't really firing at the moment. But as an overall general stock market sentiment, I just don't see that there are any signs that this rally in the US stock market has finished yet. Let's look at it on a daily basis. So we had some targets here. First one was 13.24. We did break below that, got down to a low of 13.12. We did have the next level down as 13.03, which I thought might have pulled it up. I guess that's still possible, and really we need to break above this high here at 13.45. So we closed the week at 13.31, so there's about another 14 points. A break above this high from the 19th of May would signal more clearly that we're heading higher. We're going to get some resistance at 13.70, but I think the probability now has shifted more towards the fact that the US stock market is heading up from here, particularly with the US dollar index falling the way that it did. Let's have a look at our indexes. So this is the ASX 200 versus the FTSE London Exchange and the German DAX. So you can see we've been an amazing underperformer since really started around about the middle of last year. So after the correction in May of June last year on global markets, our index has essentially done nothing. We've been flat for 12 months, whereas Germany has gone up considerably, even the UK has gone up considerably. And, and this is all for reasons of international selling that I've discussed many times before. So let's look at our index on a daily chart. We broke through this key support level. We've now, just adjust this down, we broke through that key support level. We've gone beyond the 61.8% of the run up from this point here, from this double bottom that we had in July of last year. So just looking to see how far this might bounce. We're getting some overlap, as you can see. We overlapped this on this low here. We came up and only just made it as far as this overlap. Next time we went down, we formed a low down here, and the next time we rose up, it went above these lows of early May. This time we've gone above the lows of the middle of May. So the downward momentum is slowing, but I'm not convinced yet that it's necessarily finished. So we still need to be a bit cautious about it, but certainly the ASX looked a bit stronger in the last couple of days. Well, let's have a look at the materials index. So I'll put this on a weekly chart. So you can see still clearly big picture uptrend, but we're at the same level that we were at in October of last year and April of last year and January of last year. So really, the stock market hasn't done a whole heap in that time, and it's just sitting on that key support level. So whilst we're holding on to that support level, we're really still in, I guess, technically uptrend, but it's really more sideways than anything else, and there's just not a lot of point in having large exposure when the market is just heading sideways. Let's have a look at the finance index now on a weekly chart, and really it's done nothing, and I think there's a lot of things against the banks at the moment, as I've discussed through the week in the daily alerts. Let's look at the energy index. So energy had a breakout above this key resistance level. It only lasted 2 weeks, closed back into it. Come back now to the moving average. So yeah, I'm unclear as to whether this might go up or down in the short term. So let's get back to the rest of the presentation. So the copper inventory that we've been tracking now for quite some time, you can see has leveled off. This rise here has, as I've written about in the daily alerts this weekend, this rise in the copper stock levels has been largely a result of China starting to consume some of the material that they've been stockpiling. So it's really been a destocking process, getting those inventory levels down, and that's caused the inventory in the warehouse to go up, the London warehouse to go up, and as a result the share price, the copper price has been a little bit under pressure, but it has held this key support level here at 391, and the signs are pretty positive for copper into the second half of the year, as I've written in the alerts this weekend. This is the nickel inventory. There's been a completely different set of dynamics going on here. The inventory levels have been falling. We would have expected the nickel price to have gone up substantially, but in fact it's also gone a bit backwards this year as well. So it's all a bit confusing what's happening with those base metals prices and inventory levels. So the strategy is really unchanged from last week. We're going to maintain a focus on short-selling retailers, the banks, and certain selected industrials such as the steel stocks. I think we can start to look at rebuilding very carefully in gold and silver stocks and maybe copper stocks, but definitely on buying the dips only. And as far as the other stocks go, we really want to trade the ranges and just stay with that process, because I really don't see anything that's going to drive our major stocks to break out of their current ranges. And finally, let's just have a look at gold and silver. So here's gold on a daily basis. I traced this out quite a few weeks ago, that we would get a rebound from these levels. Didn't really, just dipped, well, pretty much held this 1473 level on a closing basis. Got a little bit below it on the 5th of May, but did close at 1473, so that was pretty spot on. We got a bit of a bounce. We then got a retracement. Wasn't sure whether it was going to form a lower low or not, so I had the possibility down here of 1442. It now looks like that's not going to happen. We've got a close on Friday night above this high at the 11th of May, so I really think from here on it's moving higher to 1570. And then I would expect that it will break through 1570 eventually and head on up into the 1600s. And silver, we'll just look at this on a weekly chart. It's better to look at it here because I don't tend to get continuous data on a daily basis. So you can see we have appeared to have bottomed out on the 30-week moving average, and silver had a pretty good week as well. So certainly looking to accumulate silver for a run back up to $50. So that's it for this week. We'll talk again next weekend. Cheers.